Afternoon, good evening. It's super to be here with everyone and to talk about these issues in trying to find inclusive insurance solutions around digital activities. I'm Michael McCord from the Microinsurance Center at Milliman, and we're going to take 90 minutes today to talk about different models. We have some great speakers. I'll talk about that in just a moment. And we have a couple issues to talk about in general. We'll talk for 90 minutes, but at the end of 90 minutes, what we've decided to do is we'll cut off the recording, we'll cut off the main session, and then those who are interested can stay on for another half hour for a chat. So sort of like the coming up to the podium to talk to the speakers part. I think that should be helpful in getting some of the questions addressed and having a much more lively interaction. The meeting's being recorded so that if you see yourself on social media next week or tomorrow, asking some cool question or something, that's because we did this. And I guess if you don't want to be recorded, you have to turn yourself off or something. I don't know, it's your choice. We're being very sophisticated today. Everybody always gets confused between the chat function and the question and answers. And so use the chat function just in case you have technical issues, and use the Q&A function for your questions. I'll try to pick up questions as we go and address them. And so do feel free at any time to post your question, and I will feel free to ask your question or not ask your question. That's my prerogative, I guess. The one piece of power that I have. So with that, let's go. We're not going to have slides, except for the perfunctory slides. What we're going to have are three spectacular speakers, all of whom I suspect you know. Jeremy Leach from Inclusivity Solutions has been around in the public sector, the private sector, the internet specter, everywhere. And he's been a real thought leader for a number of years in microinsurance. Richard Leftley will celebrate, I think, 20 years in microinsurance next year. So yep. Just about to leave his teens. And as we've seen, some teen activity over the last year or so, switching from or merging into a new company, the Microinsurance company. And he'll have a chance to tell us about that in a little bit. And Andrew Nkolola from AYO Zambia. It's been around for a while, but AYO is a microinsurance company that's a joint venture between MTN and private sector entities. And so all of these speakers have been doing really extraordinary cutting edge work for a number of years. And so we have a great deal of wisdom. If you saw my notes on LinkedIn, I warned everyone that there's so much wisdom here that your computers may crash. So without much more, let me just talk about the agenda that we have for today, so you can get some idea of the topics that we're approaching. We'll do a little introduction to talk about the different models that our speakers use. Then we'll talk about partnerships and value chains. We'll talk about customer centricity. Always we have to talk about customers, because partnerships, customers, these go together. Without either piece, you have nothing. Service delivery, how are we getting things to people? How do we do this more efficiently with technology and with more innovation? And then we'll look at what's coming in the future. What do we have that we should see in the next 5 years or so? I think one thing that I think microinsurance in many ways, or inclusive insurance, has really led the way in some technologies for insurance. And so, where are we heading? What's going to happen in 5 years so that we can all start to prepare and move towards that? So let me let me move to Richard. So Richard, you can tell us about a little bit about the microinsurance company, and you can tell us about the operational model that you follow.
Sure, happy to. So yeah, the microinsurance company is a global reinsurance company. We provide both product, but also technology that underpins the product. And we're working across Africa, Asia, which has historically been our kind of, I guess, the territories that we worked in, just about to launch in Latin America. And in the last year, we've also been quite active in the Middle East. Most of you, I hope, would know about Microinsure. So we started off as an insurtech, as a broker, really because I guess we looked at the market and realized that insurance companies had been around for decades and yet weren't really serving 97% of the population. So the idea with Microinsure was to get up and running quickly, to get up and running cheaply, to work out what was broken in the market, to try and find solutions. And having signed up tens of millions of people to insurance for the first time, we felt like we'd learned a fair bit. And in the last couple of years, we decided that we had to kind of go that next step and make sure that what we were doing was sustainable. And we realized that we had to become the insurance company, or we had to carry the risk in order to achieve that. And as a result, we made that transition into underwriting. So our model now is that we've taken all the lessons that we learned over nearly 20 years of designing simple products, very frictionless customer journeys, and the IT that underpins that. And we added to that in the last year the balance sheet so that we could underwrite the products.
So this is really a story of evolution. I've appreciated watching Richard as he's moved through microinsurance and inclusive insurance over the years, trying something. I don't want to say, well, maybe failing, maybe not failing.
A lot of failure,
yeah.
Right, Michael? I mean, I sometimes think that those are the most valuable things that we've done. Has been where we've learned from the mistakes.
Yep, and it's very clear. This is a very clear progression throughout the history, Richard's history, and the history of Microinsure. This evolution, and now moving into a phase where you're actually the underwriter. Jeremy, what about inclusivity solutions? What about the model you're following?
Yeah, so we're in an inclusive insurtech, I guess, similar to how Richard mentioned it. I don't think it was actually called inclusive insurtechs when Richard was setting out, or we did. Absolutely. So we basically design, build, and operate digital insurance businesses, particularly with large distribution partners and supporting the risk carriers. We're backed by RGA, a global that can support us on the life and health risks, and again play that role from the balance sheet and the reinsurance side in support of what we're doing across those markets. Currently operating, I think, across 6 countries now, primarily in Africa. Head office based in Cape Town under wife's orders. My wife's orders, that is. But again, supporting a range of African countries, and also with the odd foray into Southeast Asia, which has had a few hiccups along the way. Yeah, in terms of background, Richard and I go back a long way. I sat on his board for a while, and so I see us as initially a fast follower, and then maybe a not so fast follower. And also as a consultant, I was also advising MTN around the insurance space. So it's funny, I'm sitting on this kind of panel with people I've known, or organizations I've engaged with with different hats over the years.
I like the wife's orders aspect. Yeah, that's why I'm here in Appleton, Wisconsin. So same reason. But Jeremy, just for some clarity for the audience, what's the difference if both you and Richard, Microinsurance Company, and Inclusivity Solutions are inclusive insurtechs? What's the difference?
Oh, I wouldn't call us an inclusive insurtech. We're an insurance company.
There we go. There's your answer. Richard has now grown up into a full insurance company.
Yeah, and also I think whilst we do deal with low income people, and we do deal, with what was traditionally called the microinsurance sector, we're also active in the US and in the UK. We're selling to gig workers. We're insuring if your meal's late on the back of the guy's motorbike, then we refund it. Or if you want professional indemnity insurance for 60 minutes to provide a kind of Pilates class to a bunch of accountants, then we're insuring that. So we've taken a lot of the lessons that we learned in Africa and Asia around kind of very simple products and very frictionless customer journeys, and we're deploying that into developed economies. So it is, and we would consider that still to be microinsurance. Okay, it's different to low-income insurance, but it has a lot of the same features, and the micro element is that it's for a short duration or for a short distance.
So I think there are a lot of similarities. Otherwise, I mean, except from obviously they're now grown up to being kind of insurer. I think from our side, at least, we certainly realized that technology is an enabler. So while we call ourselves, I guess, inclusive in insurtech, we know that technology only goes so far. Unless you really understand the needs on the ground and the distribution capabilities, you're really not going to get anywhere. And as we've seen around some of the case studies around microinsurance over the last 20 years, they're still quite patchy in terms of scale models. And we've always thought, a lot of people have thought that suddenly you can bring in technology and suddenly you'll change this overnight. And we know from experience that is not the case. So we've had to build out the capabilities beyond just the platform to support product development and pricing, human-centered design, research, go-to-market kind of requirements. And we'll probably talk about that more going forward. But my favorite analogy, not to jump in the gun, but on understanding the markets is, if you look at kind of South Africa and Ghana, where funeral insurance is a product which is bought and understood extremely well, you took that to Tanzania. In my consulting days, you saw funeral insurance being deployed there and clients ringing up saying, why are you cursing us? Why are you wishing us dead? So again, you can't just rely on the platform and try to replicate what you have in one market, deploy to another, or a top end market to the low end. You really got to think through the proposition in the market. So our team really has that at its center. And so it's a nice link for your customer centricity angle later in the conversation.
Yeah, excellent. Okay, Andrew, what is the model that you follow at AYO Zambia, and how do you differentiate yourself from Richard and Jeremy?
Okay, first and foremost, thanks for the opportunity. It's great to be here, and obviously amongst such knowledgeable and experienced panelists, I think it goes without saying that both have contributed extensively to the landscape that we are now obviously traversing. So, Michael, to answer your question, first and foremost, I think AYO is primarily an offspring, if you like, of an effort to leverage the key competencies, I'd like to say, between a telco company or mobile network operator, as they are referred to in some areas, and of course, on the other side, an insurance company or a private insurance investor in the form of Metropolitan Momentum Holdings and MTN Group. This journey or this vision basically started, I believe, some 6 years ago. And these two parties, pardon my French, decided to jump into bed and consummate this relationship, and giving birth to AYO, who essentially is an intermediary, depending, of course, with the markets in which we operate. For Zambia specifically, we are operating under an intermediary license by the way of a brokerage. And our core service, obviously, is in the microinsurance space and providing services or insurance services, to be specific, that speak to a market segment that previously has had little to no experience with insurance generally. In line with what Richard and Jeremy are obviously doing very well and have done previously also very well, I would say we jump across both sides of the fence with what they're doing. So we're not entirely an insurtech with regards our operations, but pretty much leverage off of digital technology through which we have developed in connection with our partners to provide insurance or inclusive insurance specifically to the market at large. We are currently operating as a Pan-African company in Uganda, Ghana, Zambia was third to market, and a few other countries obviously lined up, hopefully sooner rather than later.
Sooner rather than later, yeah. Growth is critical. So you say you're not an insurtech, and you're working with the mobile network operators. Now, there's been huge positives working with mobile network operators, right? In terms of partnerships and how you can get to the market, what your value chain component. And so over the years, it's been very positive. issues, the expansion. I mean, I remember conferences where Richard would tell us that he was onboarding 1,000 clients a minute through mobile network operators, right? Pakistan and others, for example. And so how do you work with the mobile network operator in terms of the value proposition that you provide to them? What is it that what's the motivation that got them to, in your words, jump into bed together with the metropolitan private sector investors?
Okay. So I don't know if Rishi is on the call, but I think he may have alluded to this in the first session. If not, I'll definitely make reference to it. So I think by and large, it goes without saying that across the telco space, in terms of the industry itself, there has been some kind of reduction with regards revenue generation from the more traditional core operations that they're into. And those obviously being voice calls. I mean, that has been that they're calling for a very long time since the innovation came to being. So I think over the past few years, there has been some general decline with regards revenue and obviously general customer usage of those services, by and large because of the competition with regards other means of communication that are a little bit more cost effective and for the customers generally. So it goes without saying that I think generally most telcos, especially the bigger ones in the world today, are trying to see as much as possible what other streams of business can potentially add value to what they're currently undertaking. And I think the general proposition is that, or the general understanding rather, is that with time, a lot of these traditional services that they've been offering potentially could not be available. So really, I believe that was the key motivation. And I think strategically, MTN itself is aligned to that in terms of their vision for the next 10 to 15, 20 years in terms of leveraging off of their capabilities to provide financial services. I think the beginning of that is obviously through the mobile money platform that they have, and a lot of other telcos have obviously ably entered into. But within that space, there is opportunity to provide actual services that are specific and are useful with regards to that proposition of financial services. And of course, it goes without saying that insurance is definitely one of them.
Excellent. Excellent. And Richard and Jeremy, I remember that there was it's been an evolution with the MNOs also, right? First there were no MNOs involved. Then Richard, you did some work in Ghana, really the inception of the MNO work. And there's been a lot of evolution to those relationships. We relied a lot on the MNOs for sales and for service and basically for very much of the transactional part of the business. Now, what it seems that I'm seeing is that we're moving away from generally moving away from MNOs as the sales agent, as the kind of front face, but moving to the back office, so to speak, where the MNOs become the simply the transactional vehicle. So as Andrew was saying, leveraging the mobile money that we seem to be seeing more and more of, but really not so much front facing, not so much sales, but much more using the systems to be able to create the payment structures, both in terms of premiums and in terms of claims distribution.
Yeah, I think it's more nuanced than that, Michael. Yeah, I think it's more nuanced than that. I mean, Jeremy, I don't know if you'd agree, but I think, you know, look, when we started working with mobile network operators in 2009, what we needed from them was their client base, obviously huge numbers of clients, their brand, which was fundamentally trusted because people bought airtime from the telco and it just worked. And therefore, when that brand turned around and said, if you get sick, if you die, if you have an accident, we'll be there. And we needed their payments mechanism. Now, whether that was through through loyalty. So they were in effect paying for the insurance in return for a change, monetizing a change in consumer behavior, or whether that was through DCB, which is airtime deduction, daily. It's called daily carrier billing, so the daily transactions, or whether that was through mobile money, right? So what we needed was their brand and their payments mechanism. Now, when we first started working with the telcos, the model was one of convincing the telcos that insurance was a fantastic way of changing consumer behavior. So we could use insurance to get people to, take a SIM card, use a SIM card for longer, top up more airtime. But over time, those models have transitioned to more of a B2B2C model, where we've taken on the role of selling through a kind of call center. So, in a country like Pakistan now, we're selling through our own kind of call center. We do, I think it's more than 1 million billing transactions a day in a country like Pakistan to airtime deduction, mobile wallets, and the like. It's a huge operation, but we're still leveraging the brand of the telco. So they're very much, the front office, and we're leveraging their payments gateway. So whilst the method of selling, so it went from kind of embedded to then bundling to now kind of, standalone sale, sold full products. What we need from the telco hasn't changed over the course of those models. We still need their brand and we still need their payments gateway. Jeremy, what do you think?
I'd actually support that as well. So I also think it's more nuanced now. I would say that AYO is pretty much front and center in terms of branding in the markets as well. So it's very much, MTNI, as you can see behind him, and it's around that kind of trust side. You're seeing that as well with kind of Vodacom, obviously in South Africa, and now they're thinking around other markets. So again, and a couple of other opcos. So certainly I think the point around still relying on a hero brand is critical. I just checked as well. I did a paper around 2015 for the Gates Foundation when I was at BFA, and I used the language of strategic mobile insurance in terms of transactional mobile insurance. Transactional being leveraging the payment capabilities to be able to launch insurance. And how transactional has evolved is they're now talking more about marketplace. But I also don't think we're ever going to be, well, not ever. I don't think those marketplaces are really viable in most emerging markets we've faced. Even in South Africa, where you have a marketplace, we have something like Hippo and a few other aggregators where you can log in, get a best price for an insurance product. We're still not necessarily seeing the volumes there that's really making these kind of fully viable kind of as a standalone business, although we're starting to see some inroads in that case. And that's in a market where insurance in South Africa, insurance is well understood, and there's certainly kind of onto kind of price competition markets. In the markets outside of South Africa, where penetration is still 2 to 5% of the adult population, we're still a long way from those individuals saying we're going to log on, find the best price, and then choose based on those kind of capabilities. Maybe with some minor exceptions, compulsory motor maybe, but it's still about convenience. So I don't think these transactional models, which are now talking about marketplaces, are really going to get the volume or have the transformative effect that we want in terms of driving scale and insurance. So I still very much believe that you need a strategic model where you're leveraging the brand, the distribution capabilities, the affinity database, the data of the customers, and the frictionless payments in place to support it. And that's still going to be critical. And particularly the big challenge on the payment side or frictionless payments is to ensure that you can have payments. And one of the big challenges on mobile operators is that this massive launch of mobile money, which has been phenomenal, and okay, it's taken a lot longer than we expected, but is now phenomenal. And you're now seeing in Kenya with Safaricom and Pesa now being the biggest revenue generator for the business, which is a huge signal of the importance of financial services in these kind of mobile operators. But they were still predicated on the point of push payments, where you have to initiate the payment yourself using your control. And we know without a doubt that that does not work for insurance. So it may work well for electricity or airtime, where if I don't pay the electricity, my wife will be forcing me to cook in the dark. So there's an immediate repercussion if you don't pay. Insurance, unfortunately, if you don't pay, you don't get the benefit at the time you most need it. So the implications are far higher than not paying for your electricity. but the impact is not immediate, and that's a challenge. So again, for mobile operators and the mobile money industry, we need to think more and more around how to make those payments frictionless. So we are seeing that embedded and bundled models coming to bear, as well as kind of the old recurring payments for individual policies. We heard from Rishi earlier that airtime deduction is being challenged in a number of markets. So again, we're seeing how do we use airtime in certain markets as a recurring payment mechanism. We're seeing mobile money being problematic. It's not, Safaricom are not allowed to do recurring payments so far, although that may be changing soon with M-Pesa. And then other companies, the whole setup or the governance structure prevents recurring payments on mobile money. So again, sorry, long story, but I think strategic is still very much the way to go. We're seeing those players playing that kind of strong role in that area, but we still need to fix some of the frictionless payment aspects to really make them sing.
Yeah, I'll chime in there, and I agree, Jeremy. Obviously, not to speak directly for the telco, but I think it's evident that a lot of the telecommunications companies that are entering partnerships like this are actually using these opportunities to actually get as much learnings as quickly as possible, especially from an insurance perspective. As you rightly mentioned, the dynamics and fundamentals from general financial transactions are quite different when you come to insurance specifically. And the telcos being what they are, and obviously having invested a lot of their time and energy and businesses into the more traditional services, are gradually learning and getting lessons from that are a little bit more beneficial to what they're trying to do in terms of spreading their wings with regards financial services. With regards to the payment side specifically, I think it goes without saying again, and you rightly mentioned that from a technological and obviously efficiency and scale perspective, I think the mobile money platform specifically has been the game changer with regards services. But like you said again, it's primarily used for utility payments and other, in some cases, person-to-person transactions. Bringing in the insurance component is not normally that easy. But I think what we've tried to do or tried to learn in our exploration with regards microinsurance through the mobile phone platform is basically try to identify some regular behavior patterns that we can try to sync to insurance provision, if you like, and by that obviously gain a level of insurance acceptance. So the very examples you've mentioned to do with, for example, person-to-person payments, utility payments, and like you rightly mentioned, find out ways through which insurance potentially can be attached to that level of behavior where a person regularly makes these transactions, but most importantly, the person is also made aware that by them making these transactions, they're also acquiring some level of insurance cover that is beneficial and useful to them. So by and large, long and short as well from me, I think the potential is basically in the actual strategy and obviously the market in which a lot of these partnerships and between telco and insurer or insurtech are actually undertaken that can foster specific models.
So Andrew, in this case, AYO is insuring people based on their activity with MTN. And so you do a certain amount of activity, you get some insurance. So this is kind of the freemium model newly applied, if you will. Okay, and what we've seen in other places, excuse me, is a transition from the freemium models, because although some of the motivations that we talked about before with the MNOs, they were good in the beginning and they worked in the beginning, and then the cost structure got kind of skewed. The actual clients that stayed on were rather limited once they had to start paying for it. Are you seeing that there's going to be a need for a transition in that way, or given that MTN is one of your owners, how are you managing that?
Okay, thanks, Michael. So I think from the onset, by definition, the freemium obviously is free insurance. But in this particular case, I think the context we're looking at it is that the telco company basically takes up the cost of paying for that insurance that the customer is able to access. So by and large, it's a loyalty or reward to the customer generally for the usage or using that particular telco's network regularly. So the telco company obviously invests in that by sponsoring the premium for the customer. In terms of what the future holds or what the experience has been, I think generally in Zambia, we are quite fortunate to have a relatively high conversion rate to paid for obviously being above and beyond the free cover that is sponsored by MTN that the customer can access. They also have the added option of paying or sponsoring their own cover above and beyond the freemium that they're getting. So that there has been a relatively high conversion from loyalty to actually paid for. But I think what we've tried to do is mainly from the actual distribution side of things, or how we introduce the actual insurance proposition to the customer at each level. So obviously the entry point is that MTN, in this case in Zambia, is offering a free insurance cover for you as a reward for your loyalty to the network and the brand itself, by means of yourself, obviously, continuously interacting and continuing to purchase and recharge your phone, for example. That is a given. But at that particular point of interaction, we make it a point to further educate the customer on the additional value of actually transitioning or opting in to an additional cover, if you like, or extended cover, if you like, that actually they then control and pay for. So it's worked pretty well so far, I must add, in that obviously, like I mentioned, we do have quite a high number of customers that are actually paying for the service themselves. In terms of what the end game is with regards to this, or what the future holds, whether freemium is still valuable, I still believe so. I think it's mainly in the proposition that it's actually proposed. In terms of the actual activity, I think nothing has changed. A lot of customers that potentially do not opt in for the paid for cover and remain on the freemium are by and large traditionally quite passive in that even from a claims perspective, I can give some insights. Most of the claims that we have been receiving, and I think I can speak for the other opcos where we're operating, are basically claims from customers who are actually paying. And I think it's a no-brainer why that is probably because somebody's a bit more cognizant when they're actually spending money on something that they value. And of course, when that time comes for a claim, they'll be the first and in larger numbers doing so. So what the future holds for me, I think there is some relative value with regards to the freemium proposition, at least at an entry level, especially from a go-to-market perspective, and obviously as a tool to educate and sensitize and get the word out there to as many people as possible. But I think the key success is in how you transition those customers into a more paid for proposition with regards to the insurance that they are purchasing, or rather the insurance that they're enjoying.
Okay, and you've really got two sides. Just a second, Jeremy, but you've got two sides. You've got the free piece that's just a loyalty play,
Yeah.
and then you've got a real insurance product. So it's really, there's a separation between them.
Yeah, I like to give a simple analogy to say you can pretty much offer someone a car for free, but if they've been doing without it for a while and they don't see the value in it, they'll pretty much just either get rid of it or sell it or whatever it is. But you need to also upskill them, if you like, from an educative perspective to say, this car obviously needs some fuel. I don't know if this example is the correct one, by the way. I seem to be losing it. But in any case, when the customer basically appreciates that and sees, okay, I can use this to get from point A to point B, but to do that, I'll need to spend something. I'll need to buy some petrol to put in it, and et cetera, et cetera. And then because of that value attached, they will begin, obviously, to pay greater attention to it. But like we normally say, especially in Africa, freebies basically are just freebies. So, but again, I'm not potentially disparaging the freemium model. I think it should be always undertaken in the context of the market, especially with regards to the level of knowledge of insurance within that market, and more especially how you engage the customer with regards getting them to appreciate and understand what they're getting into. People will get free stuff for free, for nothing. So it's really imparting the value. Yes, they'll get it because it's free. Yeah, but it's really a question of how you, if you like, upsell them and educate them to the actual value and transition them to a paid for proposition.
Right. Jeremy.
Yeah, thanks. I just want to follow up a couple of those kind of comments, which I think has been really, really insightful. So thanks for that, Andrew. And also appreciate Richard's comment, because my hypothesis on this, and I think it's backed up by some of the data, is that the freemium, which I actually kind of differentiate as free to premium. So actually premium, I put is basically including the loyalty plus the upsell, at least in the language I tend to think about there, is that the freemium only works, the ability to convert loyalty to upsell, is if you have frictionless payments in place. And where my understanding is a lot of cases where the freemium has failed is where you've been able to drive loyalty, but have not got effective frictionless payments to drive an upsell product. And I think Airtel was a good example with the Microinsurance kind of scenario where you didn't have the effective payment mechanisms. We've also seen this in a number of other markets as well. So on the loyalty or the free aspect, we certainly see if it's done well and it's well, that you maybe have an opt-in models, you have dynamic kind of engagement and good education kind of awareness, we can see significant uplift from the loyalty. And we've done this across a number of markets now, where we're seeing significant orders of change from those who have insurance compared to those who don't, making them more active and more engaged customers. And at a significant enough level that's certainly viable to have being kind of paid for. So we see loyalty in terms of driving behavior having significant positive impacts in terms of business, whether it's about increasing transactions or the value of transactions, if it's designed well on that side. But the precursor on that is it needs to be well communicated and understood and with dynamic engagements. The freemium aspect, converting from those loyalty to paid, you have to have that frictionless payments, whether it's basically just the easy means to top up. If you don't have that, you don't even try. And again, I think that's where a lot of the massive fall off of loyalty models is because they didn't have the infrastructure in place to support the converting to loyalty to paid. And that's, again, I think Zambia and other markets have shown that you've seen massive drop off in cover because you didn't have that infrastructure in place. Now, related to this, you've seen in the literature a lot of hype around embedded finance, very much so in the US as well. And I think in some ways there's a danger of that. So I think there's a lot of potential around embedded finance or embedded insurance, saying, would you like insurance of that? And essentially, we've been doing that for a long time in Africa. But the problem is, and emerging markets, it's so critical to communicate to the customers. Otherwise, you're going to have these great, massive takeoff of numbers, but with claims ratios of 2 to 10%, because nobody really understands the value of the insurance. So again, we need to think about how do you leverage these models? How do you leverage these frictionless payment models, whether embedded, bundled, or voluntary kind of paid models, but in a way where you really ensure that people are aware and actively engaging and can actively claim, and that through that you basically build the broader insurance space.
So in many ways, what you're talking about, Jeremy and Andrew also, is really there's the technology side that has to facilitate the transaction, but there's also this customer centricity, if you will, this focus on how customers become aware, how they know what they've got, how they see value. And even I would argue that this all starts with what products you're offering them, right? I mean, we see value if you don't need a car, but you need a bicycle. If you get a car, okay. If you get a bicycle, maybe that's what you really need. So Richard, how do you figure out what kind of demand there is in the market and how you create the value for customers?
Sure. Well, I've been following this discussion with interest, and I several times bit my tongue because it's kind of interesting. We spend so much time talking about mobile phone companies, but actually, if I think about what's important to the business that I've been running, mobile phone companies are the things that everyone always gets excited about, but they're also the partnerships that generate the least revenue for us as a business. So I'm always delighted when we come to conferences and everyone wants to know about mobile phone companies, because frankly, they're focused on the wrong partners if they want to run a successful business. So that's the first point I'd say, is that, I think it's they're very exciting kind of businesses, but
this is where the big volume is, isn't it, Richard?
No,
not
at all. No, that's the funny thing, is that it's been like a good now more than 10 years of doing this stuff, and it's been a big kind of switch bait, right? Like, you guys all been focused on mobile phone companies and talking about them at conferences. No one makes any money out of a mobile phone company, let's be honest. Anyway, so you asked a question about kind of customer value, right? So I think what's really interesting in these models is that you've got to find this kind of sweet spot. So on one side, you've got what is it that the client wants, right? What is it that the client needs, the end user? You know, and so they might be worried about, like, what happens, you know, how will my kid finish school if something happens to me? You know, who's going to pay for the schooling of my child? Or, you know, how would I pay for that bill or that rent if I had to go to hospital and spend the money on, you know, on hospital treatment? So what are the things, you know, what are the things that people wake up? I mean, because I don't think people wake up wanting to buy insurance, but I do think they wake up every day, you know, worrying about things, worrying about risks. So what we try and find is this kind of intersection between kind of what is it that the clients wake up worrying about, and what is it that our distribution partner, because predominantly microinsurance is a B2B or a B2B2C business. We're distributing, you know, there's very, very little B2C. Very few people go direct to the consumer. We're going through other people's brands and other people's payment gateways, because that's really necessary to make this work. And so what you have to work out is what's that intersect between the end user and what they want and the partner, whether it's a telco, a bank, a ride hailing company, whatever they are, what do they want? And is there an intersect where both parties get something, right? And I think this is where a lot of people get very confused as to who's my client. Is my client the B2B business, or is my client the end, you know, the low income person on the street in Zambia? And I've seen many kind of like examples of kind of great products which have been designed around the end user's needs, but totally ignore the distribution partner's kind of needs. And as a result, completely fail, because there's no commercial reason why the distribution partner would want to push that product and get it to scale. And at the heart of it, this is why, you know, the discussion that we've just been having about free, freemium, upsell, all the rest of it, it's where basically those models, there was a failure in finding that intersect, right? That's why those models came to an end. And you know, and I've also seen models where the interest of the B2B partner is completely catered for at the total ignorance of the end user's kind of needs, right? And similarly, those unfortunately have normally succeeded because ultimately the partner wants to push them and they push those products down into the community, even though the community don't really want those products. So if you had to choose, and I'm being cynical here, and you know me, Michael, the older I get, the more cynical I get. If you have to choose which one you want to be interested in, really make sure you understand what the B2B partner wants. And if you can work out what the end user wants as well, then that's a bonus point.
All right.
And so what you're talking about really is what we've been talking about at the Microinsurance Center at Milliman is we're talking about that magical balance. How do we make it so that all the parties are benefiting? And yeah, I think we've all got probably plenty of examples where this has been way unbalanced.
Yeah.
And so figuring out how to make that balance. Andrew, how do you do that?
Sorry, which balance?
How do you create that balance between the customer and the distributor, the insurer? How do you create a balance in there?
Okay, so for me, I think the balance is basically in the original proposition or vision that you have. So at a high level, the customer, as we like to put it, always comes first. But I think we are all cognizant to the fact that that may not always be the case. But I think, like Richard and yourself mentioned, is that it is potentially the starting point in whatever we try to do. So even with the products and processes that we've managed to develop and implement on the market, a lot of them have relied heavily on the interaction that was made with the customers even before the products were actually designed, in terms of just getting to understand what some of their immediate needs and learnings are. And that's at the product design phase. But above and beyond that, we also try to look at the practicality of implementing them as well. So obviously, we are looking to leverage off of, as much as possible, the telco platform with regards either distribution and or servicing the customer. So beyond the product, we also have to ideate and engage with our partners around the actual viability with regards taking this to market. Because I think, like Richard mentioned, it doesn't make sense for you to have a brilliant product that you can't distribute. And in some cases, you can have an absolutely hopeless or irrelevant product that you're able to distribute very effectively. So the balance in that obviously is in the engagement, and that's what we've tried to do. And we are fortunate in that obviously with the partnership in the current form that it's undertaken under AYO, we have obviously the telco as an active shareholder or vested interest in what we do, and as such are heavily involved in the actual product design from the very beginning in terms of how it can actually be replicated and used through their platforms for either distribution or service or any other intervention. So to answer your question, Michael, I think it's mainly in the actual interaction and involvement. So I know we're jumping around here, but I think the key lesson from what we have established thus far is that within partnerships, I think it helps a lot better when all parties are actually involved from the bottom up. And even for those that are not experienced in this actual field. So you have a telco company that probably doesn't know too much about insurance, but in that space itself, it gives you an opportunity to get perspective from a person that is, or people that are totally blank, that you as a potentially an insurer would have taken for granted, having the ability to know it all where insurance is concerned, and vice versa. So when you have an insurtech or insurance partner that basically doesn't know jack about telco distribution or the telco platform itself, they also provide insights that are useful. So long and short for me, I think balance is by and large achieved through that interaction from the ground up with regards product design itself, right through to the processes of how the services are delivered. And I think that's a key ingredient with regards creating that balance, because in either way, you will need to compensate at each level or angle, one way or the other. And lastly, it also gives you fresh insight as to whether that partnership is actually worth it. Because if that balance is not achieved, or there is a great imbalance with regards that relationship, with regards insurance services, for example, through the telco, then it's probably not much worth going into, like Richard actually rightly said. And just to counter you, Richard, on the profitability from a telco, definitely agreeable with regards to that. But I think for me, the money is not really made from the telco itself, but actually from the base or the customer that the telco potentially offers. And like you rightly highlighted, I think it's all in the relationship that goes with how we strike a balance with that particular telco, as is the case with any partner. It
yeah,
can
but it
be
helps
bank
that
insurance.
it helps that they've got a 75% shareholding in you, Andrew. It's a little bit different when the telco has a 75% shareholding in you, that maybe their interest is aligned in allowing you to be profitable. Whereas poor old Jeremy sitting down there who doesn't have a 75% shareholding from a telco, it's a slightly different position, isn't it?
Absolutely. And that's why I mentioned to say that I think we are by and large fortunate that what we have tried to do basically and succeeded in doing is basically leveraging off of that particular investment or shareholding, if you like, with regards to the partnership.
It's also a curse though, isn't it? Because it holds you to just MTN. So, you know, it works.
Well,
and you did the same with AXA, right,
yeah.
Richard?
Yeah.
I mean, this kind of a relationship has helped to solidify and to link the motivations. But Jeremy, you don't have the 75% ownership.
Yeah.
You don't have partners like that. You have to get the partners. You have to keep the partners happy in ways that are presumably beyond just commissions and cash. How do you do that? How do you create the balance based with client centricity, products that clients want, partners that want to offer those products?
Yeah, that's a very good point. And I often think about that Ben Horowitz book, The Hard Thing About Hard Things. And I think we're the hard thing about hard things in our business model, because unlike Richard, who started off in a microfinance network of Opportunity International, maybe not didn't get him all the way he wanted to go to, but it certainly gave the ability to experiment with basically your own internal demand. And the same with kind of Andrew with MTN. You've got from the outset, you've got your distribution. So we started with a reinsurer with Zip kind of distribution kind of partnership. So no 75%, no distribution at all. And that's a really tough place to be in, trying to build up your distribution against pretty dominant, strong players at that particular point in time. So it's been a tough run. And I think there's a few things that I need to kind of think through. One is around the magical balance around understanding the customer. And there's a nice blog on our website where we invest quite a lot of our treasure in human-centered design research. But the reality is it gives a lot of insights, but they also blatantly lie, or not just lie. They represent things as they in their ideal form rather than actually how it is. So just give 2 examples from Rwanda. We engaged in the market, and basically the clients told us it's a mix, but actually we want to use mobile money to pay because we think it's a better vehicle. But when we actually launched, we found that about I think 6% of the base had enough money in their account to pay $1 premium. So they just weren't using mobile money, and this was supposedly a sprinter country according to GSMA statistics. Rwanda was ahead of things, but people weren't using their financial instruments in that way. So airtime would have been a better model to work. Secondly, we were also told ways around how to sign customers up, and they gave us a nice list of these are the type of messages you should use to try and get people to sign things up. When we actually launched and we did A/B testing around SMSs, it was completely reversed. So the one they thought that the Human-Centered Design research group we're engaging with told us would be the worst way to sign people up was actually the one that was most powerful. You're missing out basically. So
yeah,
again,
so shock horror, like the telcos don't really understand their customers, right? Is probably the lesson that we take from that.
Well, part of that, but it's also that those human-centered design research, which is incredibly insightful, which we like, the customers don't always know what they want, which is classic behavioral economics. You can only really understand how customers behave by doing experiments to really watch how they respond and how they engage. So we've spent probably more time now shifting. We do HCD, but a lot more time experimenting around communication, around user journeys, around product design, payment mechanisms to see how people actually respond and address that. And that's going to be the critical one to actually saying, how do you drive kind of uptake? And that's linked to the point that you need people to sign up, but you also need to, in terms of balance, you need to pay claims, because if claims aren't paid, the only one winning is the insurer, maybe, but even the insurer is not going to win because they're not going to drive take up. And from a distribution partner, that claims is why they're in this in the first place, because it's good for their brand and good for their awareness. So you've got to get that balance of a product that, yes, you can push, and absolutely agree with Richard's more cynical point that you can't just launch a good product unless you've got distribution aligned. No product, doesn't matter how good it is, will sell unless you've got very aligned distribution partners, good data, sales and payment mechanisms in place. Absolutely, you need that, but then you need to also be able to pay claims in such a way that spreads word of mouth, and certainly distribution partner sees value in that. And again, that's going to be critical in that space, and that gives you that kind of balance between balance of a distribution alignment as well as customer value, because you're seeing claims actively being paid out.
Yeah, there's a lot of talk about financial education and all that stuff. And for me, the best financial education is paid claims. Show people that it really works. Jeremy, you mentioned a couple times data. Do you use data in ways to understand clients?
Absolutely.
I mean data besides just focus groups and human-centered design, but do you actually collect data on what's coming in on your clients? So sort of the little big data discussion, I guess.
Absolutely. So I mean, data is critical for us. I mean, obviously it's the qualitative and quant research to inform product design at the outset, but also it's around using the data we have around behavior from what we call the adjacent benefits, which I think Andrew was talking about, that the adjacent benefits of if you're seeing clients becoming more loyal and more active, there's an adjacent benefit to distribution partners. You can quantify that uplift. So if you basically, through a loyalty product, you're seeing in our case, one case, 56% sustained increase in spend because of insurance, you can quantify that, the benefit to the distribution partner. So we use data to quantify the increase in spend because of loyalty type products. We're using data to inform segmentation models, to support sales to customers, using data to support predictive analytics, so saying we'll actually use your data to adapt products to your needs, looking in terms of risk analysis, and obviously informing the kind of claims process. So there's quite a lot of stuff which we're doing in that area, and I see going forward, obviously the whole machine learning and stuff obviously is a key part of that in terms of helping kind of segmentation, etc. That is so much dependent on having that good data. that you can actually use and being able to kind of explore it effectively. So data is certainly something which we've been using right through.
But I think it's true. But I think it's true, Jeremy, that our models are constrained by the data that our partners are willing to share with us.
Exactly.
You know, so I mean, you know, for example, you know, when we first all started doing the freemium insurance, it was very much a kind of blunt instrument, right? It was like, okay, so if you top up $2 or $2.50 or $3 or $4, the more you top up, the more free insurance you get. But by definition, you were effectively rewarding people for not changing their behavior. I mean, so some people you were rewarding because if they were a low top up kind of customer, they were a SIM switcher, they may well respond to the offer of free insurance and choose to top up more with the network. But you were effectively giving away free insurance to the people that were already topping up quite a lot anyway. They were getting free insurance for no change in behavior. You know, and we ran some models that were around this kind of free insurance where the partner was willing to give us data. And instead of just using it as a blunt instrument, what we did was we said, okay, so, you know, Lemmy has been topping up $2. So when he signs up for free insurance, we would run a kind of instant query to the BI database, and we would pull the data and say, oh, Lemmy's been topping up $2. So we would send an offer to Lemmy, you know, instantly over SMS saying, welcome to free insurance. If you want free insurance, you need to top up $2.50. And then if Michael signed up, we'd look at his data and say, oh, he's been topping up $5. So then we would ping an offer back to Michael saying, welcome to free insurance. If you want free insurance, you need to top up $5.75, right? So the offer, the kind of target that you were set depended upon your history. But in order to get that history, we needed access to the data. And some telcos weren't willing to offer that. But that model became much, much more sustainable. And some of those models existed in market for more than 5 years, right? Because basically the business model didn't rely upon a cohort of customers. It relied upon the individual changing their behavior. And the telco then only gave away or paid for insurance if that person increased their personal expenditure by, say, 20%. And so those models are much more sustainable, and they're much less of a kind of marketing thing that's just around for 6 months. But it requires the telco to give you access to data. You know, another example, we were working with a mobile platform in Asia, and they had a kind of typical kind of app. You know, you could send money, you could buy airtime, you could pay utilities, a typical kind of mobile wallet. And they had insurance, and they had like this marketplace where insurers could come and put their products on the shelf. And it was a total flop, right? This wallet had supposedly 50 million customers, and they were selling 2 policies a week, right? I mean, it was just a total, you know, no one wakes up and is going to go to that kind of, you know, voluntarily go to that app, open the marketplace, decide which personal accident policy they want from 3 different insurers. It's just never going to happen. So, you know, they came to us and said, you know, what should we do? And we said, well, you know, will you give us data? And they said, well, what do you mean? So we said, well, you know, if you could give us data so that we could see which of your customers are using your mobile wallet to pay the school fees, then we'll send them a dedicated offer saying, hey, would you like your kid to finish school if something happens to you? Or if you could give us data that on a Friday shows who sends money back to the village for their family, we'll send them a message saying, hey, if something happens to you, do you want us to keep sending that money back? And then conversion kind of like was huge, right? You know, where people were suddenly kind of being presented with an offer at the point of where they were thinking about, gosh, what would happen if I couldn't pay the school fees? Or gosh, what would happen to my family if I couldn't send this money back? Conversion was then tens of thousands, hundreds of thousands of people said, yes, I'd like to buy insurance. They were the same products that were on the marketplace. They you know, we didn't change the products. We just gained access to the data. So it's a good example of when an organization is willing to put their brand and their payments functionality alongside their data, you can do a lot better. And that's why kind of things like AYO, or, you know, if you look at Zongang, or if you look at Passa Police, or if you look at Gojek, you know, right, where the parent owns the brand and the data and the payments gateway, that's going to be a lot easier environment than for guys like me and Jeremy.
And it's actually interesting. There's a whole discussion around the whole data protection, around data sharing. I mean, talk about Rwanda, you know, the data protection rules saying you can't even host data outside the country. And so I think you may have seen MTN, I think got fined with $7 million or something, or $8 million for hosting the data in Uganda. So our challenge is if we want to do some real interesting data analytics around mobile subscriber data in Rwanda, we've got to fly there and do some of the analysis within some reasons. So again, you have that data protection nationalism, I think, one impacting one. 2 is the issues around mobile operators saying, or actually financial institutions saying, you know, this data is critical for us. and when they actually want to mask the data, so you basically have this black box where you basically got to kind of operate through, so you get limited data apart from maybe some kind of a high-level segmentation data. So I get that is an interesting challenge going forward, which is a combination of both the data protection rules coming in around how you're using that data and the practice of financial institutions and mobile operators around saying what data they're willing to share with companies that aren't owned 75%.
Yeah, I'll jump in there as well. I'll jump in there. I'd like
Hold
to
on a
jump in
second,
there as
Andrew.
well. Yeah, sure.
Yeah, I've been doing this for 25 years now, the microinsurance, inclusive insurance. And, it's been interesting to see the evolution for so long. Even now, many microinsurance programs have a set product and they don't differentiate at all. And the wonder of data and technology now is that we're able to split these up and try to have things that are more focused on individuals and the products that they really need and understanding what they might need just based on that data. And so, Andrew, you're a piece of MTN. Are you getting that kind of data? Are you able to use it? And how do you use it?
Yes, so most definitely. And again, being the privileged child of a marriage between a telco and insurer, definitely leveraging off of some of the privileges of accessing data, specifically from the telco, and in this case, MTN. And we obviously leverage heavily off of that information, not just from how we interpret the value to the customer, but actually the value to MTN itself. So we're actively involved on a regular basis, some kind of regular analysis around value creation in terms of what the AYO proposition is generally bringing to the MTN brand generally. And like Richard alluded to, a good part of that is obviously analyzing the general spend and customer behavior, obviously simply put pre-AYO, post-AYO, and obviously during the period to better obviously sell the case and show the case that at least from a loyalty perspective or a freemium perspective, when MTN spends a little money to sponsor a premium for a customer, there is that return in actual customer behavior, customer stickiness, if you like. So definitely have that privilege. But I also wanted to add that I think one of the key things that we've obviously managed to do correctly in that space or partner correctly in that space is that we don't primarily or 100% ask MTN to give us AYO as data. It's basically an interchange. So what we've tried to do is involve the telco themselves in the actual data analysis processes and also to get their own inferences, if you like. So from a data sharing perspective, especially in markets where regulation and data protection is potentially an issue, I would recommend that particular aspect, but it also depends on how deeply vested or invested the partner is in regards to that and how willing they are or interested they are to actually take up that role. So one opportunity is basically sharing the actual data and analytical side of things with the actual partner. In this case, which could be a telco themselves. So we basically just share with them specific fields or inferences that we or insights that we feel are necessary from a data perspective, which they of course then proceed to pull from their platforms and obviously give us basic or if you like in some cases where necessary anonymized references. And we both sit at the table and look at that information together and learn the inferences and share and obviously move forward based on that information. So for me, long and short, definitely a challenge if obviously your partner is not a shareholder or if you like invested in the actual business itself. But there are ways I believe potentially that can be explored by way of actually encouraging or giving that actual proposition, if you like, in terms of key responsibilities, at least a part of it to the actual partner for them to also get involved in. To what degree they do that is another question altogether, but generally we feel that that collaboration in that space generally helps.
So there's reluctance to give this data, may need to be anonymized, may not provide any data anyway. Yeah. Are there ways in which we can create something, some technological solution that they can implant on their end that can just give us the endpoint data that we're looking for, that would help us to be able to be more specific with our products without providing kind of the specific private client information. I mean, I'm just trying to think about how we can get over the reluctance to share that data. And especially given that, you know, whether it's MNOs or most distribution channels, this isn't their primary business. It's not their primary business, and it's not the key for them and their profitability. Are there ways that we can try to get around that? Maybe something you're doing, Jeremy or Richard, to be able to do that?
Probably not my area of expertise, so I'll certainly leave to my colleagues to answer that. But certainly, I mean, in theory, you can do kind of segmentation models where you have anonymized data which inform the segmentation model. We basically then set the criteria we want to reach out to, and then that's communicated through the kind of the black box of the mobile operator. And we've seen that happen on the credit side. And we're also obviously now need to see that on the insurance side. I think the downside is exactly what Richard was saying, is if we don't have that matching data, you know, customer by customer, it sometimes is not as effective in terms of whether it's a loyalty model or in terms of offering a unique kind of you know, products to individuals. So it's not ideal, but you can overcome that by masking the data and then putting key indicators of this is the type of client you want to reach out to. And we are seeing, you know, certainly work around that. I mean, it's even been discussed in terms of the you know, data protection in terms of authentication as well, where data is held on the actual device itself. So there are models, but it's still early days of really doing that well, I believe.
Okay, good. Something for the future, maybe, or more for the future. We've talked about premiums. We've talked about the facility of the technology offer of the MNOs, plus the rest of these benefits that we get from MNOs. What clients care most about is claims, and knowing that they're going to get the claims when the claims come. How does technology facilitate the ability for people to make claims?
I'd love to jump on that one.
You've probably had, with 60 million clients insured, you've probably had what, 1.5 million claims just this year?
Yeah, no, it's a lot. So we've started now. You know, now we're now we're a reinsurance company. We view ourselves as a digital kind of global insurance company. So we've now launched in countries where we don't have any boots on the ground. So it's entirely digital, right? So we're working with a telco in a country in the Middle East where we've got 3 different kind of products. You know, one's a free kind of freemium product. One's a kind of hard bundle. So there's data, you know, there's Netflix, there's insurance, and one's a kind of standalone product relating to kind of phone damage. You know, we're not in the country. We're working, you know, kind of remotely. And so, you know, we service, or we answer customers' questions, and we handle claims entirely over WhatsApp. So this country, you know, WhatsApp is ubiquitous. We also use Messenger, you know, all of the kind of whatever it is. We found that there was absolutely no reason to, you know, create our own app, right? You know, and I think that's a huge mistake that people make, because no one's going to download your app and, you know, and maintain it on their phone. You know, they're quite happy to use WhatsApp. You know, so when they've got a question, they're directed towards WhatsApp. They ask the question, they're able to get an answer. Actually, we use our team in Pakistan that services the whole of the Middle East. So we've got a team of people sat there in Pakistan. They're answering the questions. You know, if one of the questions leads to the need for a claim, so the person's question is in relation to a claim, we just ask them to take a photograph of the documentation, and then that's submitted to us over WhatsApp. And we then administrate that claim, sometimes using AI. So sometimes using machine learning to read the document, or you know, just to verify the claim itself. So, you know, screen damage, for example, we use machine learning to compare images of phones to verify that there is in fact a claim. And then either we're using kind of chatbots or real people to go back, you know, to either answer the questions if it's an effort, you know, if it's a frequently asked question, or if it's a claim, and it can be done parametrically through machine learning. We you know, no person is needed in that. We just say, yep, looks like a claim. How would you like your money? And they give us the payment details, and we trigger the payment. So we only have you know, several hundred staff globally. And yet we're adding a new country a month at the moment. You know, we're servicing tens of millions of customers, and we're handling these claims entirely kind of digitally. Oh, and claims are getting paid like same day or next day. In like 80, I think it's 83, 84% of cases get paid same day or next day.
Wow. It's a long way from the old days in microinsurance.
It's a long way, isn't it? Yeah.
Yeah.
Yeah, and in part, like one of the motivations for becoming an insurance company was that we were just so frustrated with the traditional insurers and how long they take to pay claims. You know, we were working in one East African country where we managed to get claims payment times from kind of like several months down to about 90 days, right? And the market felt that was quick enough. You know, and we've now, and we, you know, it's just frustrating, and I think, you know, that has a dramatic effect on people's perception of whether they want insurance. I think that's why people don't want it. It's one of the main reasons why people don't want insurance. They have such bad experience.
Yeah, we have to prove that there's value here, that you're actually going to get what you need when you need it, and when we promised you were going to get it. So
yeah, I mean, we're still in an industry that calls. I mean, the reason that insurance exists is to pay money to someone when something bad happens, and yet we call those losses. How does that work, right?
That's my favorite anecdote as well. I mean, I had to laugh. I think it was also in an East African country, I think it was Kenya, where the regulator tried to put in a maximum claim turnaround time of 30 days, and the industry was in an uproar, you know, and started kind of suing the kind of government to try and prevent that. Because again, it's that expectation that 90 days or more is acceptable, which it clearly isn't. So again, we use pretty much similar to what Richard's saying, is around saying, how do you turn around that process, democratize it so you've got full visibility. So our platform allows the distribution partner, whether it's our equity, F&B or Orange, whatever clients, the distribution partner has full visibility of where the claims are, where it normally just goes into black box of the insurer. And same with the clients. And Kiriwa, they can now go onto the USSD and see exactly where the claim status is, whether documents are outstanding, documents received, first level claim assessor, or approved. So again, it's basically removing the kind of black box of going into an insurer and finding out 90 days later that it's been declined or approved, because that is critical to getting this market going.
Yeah, I was going to also add in, and I'll say something a little bit controversial. Please forgive me. But
go for it. Go for it, Andrew. Then it's not just me, right?
Okay, I know, and forgive some of the words I may use, but yeah, there's a lot of hullabaloo around claims, paying claims, and the importance of paying claims. We all know that obviously insurance is the business of claims, but I think we speak a lot about it, and to a certain extent neglect the in-between. So obviously we have the distribution, the sales part, and right at the other end, the claims part. And we totally or mostly neglect the in-between, and neglecting the in-between to the extent that it's normally what determines the customer's experience when they actually make a claim. So if a customer does not know the basic process, first and foremost, they will not be able to make a claim, either whether it's genuine or fraudulent for that matter. But in any case, I think it's very important that that journey is also highlighted, especially for companies that are looking to enter the space in terms of microinsurance. First and foremost, you're dealing with, by and large, a segment that is not highly knowledgeable around insurance and obviously associated processes. And you may be involved in implementing a digital solution around claims processing and administration, which is well and good. But you also need to take into cognizance the ability of the customer to adapt to that specific process. So it's very, very important in the life of the customer journey, especially from the point of sales and as an after sale process, that customer is continuously kept up to speed and educated as to some of the things that they need to know about not just their policy in terms of the cover and the benefits they've accrued, but also, most importantly, when the claim stage comes to that, or the claim event comes to pass, how they will be effectively expected to respond in that situation. So I just felt I'd highlight that to say there's a lot of talk about pay claims, pay claims, pay claims. And of course, when you pay a lot of claims, you obviously gain more trust and more acceptance with your product. And by that, obviously, more people will enroll. But I think we also tend to ignore some of the reasons why people don't claim. So it's not always that they are, for example, what's the word? Ignorant, if you like, about the fact that they have the insurance. A lot of the customers, and we've learned that along the way very quickly, that a lot of the customers actually were a bit cagey on how they go about it. And Richard, you mentioned some of the technologies that are currently being used that are very digital, some of which we are also applying quite effectively. But there always will be customers, and quite a few of them, that are not that tech savvy, if you like. And the question is, how do those people also, how are those people also best served in those situations? I think it comes down to something that was mentioned in the first session as well, around statistically. A lot of these applications are obviously applicable or used in a more urban or peri-urban situation. In the rural areas, for those people that are privileged to have access to mobile network connectivity, a lot of them do not have the phone capabilities to do some of these transactions. And it's within that journey, from the point that they enroll, that they need to be educated and assisted in terms of either alternative ways. I think, like what Jeremy mentioned, to say that as much as you would have the telco company having sight of the claims process as a service provision to the customer, in some cases, I think it goes without saying that the telco themselves, or indeed the partner generally, whatever they may be, may obviously be brought to the fold to get involved in some of these situations. So I just thought I'd highlight that to say claims are very important, paying them, obviously, in huge numbers, but for that huge number to also be attained, it's very, very important that that scaled up base that you've got is actually clued in and educated and kept up to speed with regards what they need to do when they actually have an event that requires them to claim.
Exactly, yeah. And I remember the days, and maybe it's still the days in some places, but I remember talking to insurers who would tell me straight out, you know, I'd say, well, how do you educate people on how to make their claims? And what's your documentation? And they'd say, well, we don't tell people how to make claims. They'd make claims if we did, you know, and
exactly.
Oh man, a little misguided.
Yeah.
Let's think about the future for a second, and let's kind of stay for a moment on the on these people, maybe the rural people or the more low income people, or maybe women in general who maybe don't have the same access to this kind of information. Where are we going in the future that isn't going to leave those people out? If we think about where we're going to be in 5 years, you know, it's nice to talk about a generic inclusive insurance. And my insurer tells me that I'm not fully included because I don't have certain insurances, right? But I mean, I think for the most part, we're not just talking about people like me. And I recognize, Richard, your focus is not just low income people, but what do we do to help make sure that low income people stay in the range of these products and these services and these digital channels if they maybe don't have the access, like you were saying, Andrew? What's going to happen in 5 years?
All right, maybe I'll start on that one. So I think generally, looking at my crystal ball of inclusivity, or my inclusivity crystal ball, I think it's a bit murky right now, but definitely, I think there's a lot to look forward to. Sorry?
Thanks for marketing us.
There you go. Well, you know, I have the brand in the back. I thought I might as well give a little something back to inclusivity as well. Yeah, so generally, I would start by saying, I think, and coming from obviously a more telco-based distribution and service model, right now, obviously limited to the people that actually have access to a mobile phone. I think the next 5 years.
MTN mobile?
Sorry, yeah, currently just MTN mobile.
MTN, it's not access to any of the other networks, right?
Currently, yes, but I was just coming to that to say that I think in the next, in the near future, obviously, it's really stepping out of the captive mobile network, in this case, MTN, but more so, I think, stepping out of the mobile network platform itself, if you like, at least from an accessibility side. So I think there's a lot happening around how the platform itself can transcend some of the segregation associated, obviously, first and foremost, like I mentioned, between network to network, but also more importantly, how this service can actually, platform can serve people that actually don't even have access, direct access to a network. Now, don't ask me how. I think we're all still trying to figure that out, but I think some of the key learnings, especially from the mobile sector space, is that there already, like in countries like Zambia, a lot of shared services that competing telcos are actually leveraging off of. I think the key one from a technological perspective is obviously the towers that are used for communication, dotted all over various parts of the country. So I think initially, a lot of the telcos actually owned those towers, but now those towers are actually pretty much independent and are shared amongst all competing telcos. So I think that's a very, very good telltale sign as to where we're going. My prayer would be that in the future, there would be a lot more integration and other shared services. I think one particularly that comes to mind in Zambia is the actual now integration of mobile wallets, where you can share or send money across mobile wallets from one telco to the other. So that's another shared service or avenue of integration that potentially could lift that barrier of limitation to a specific telco opco, if you like. So that's where I see the future with regards to that. And from an inclusivity perspective, sorry again, you're welcome, Jeremy. Richard spoke to it. I think AI is very, very critical as we, especially in the digital space, acquire a lot more data year on year as much as possible. I think the end game is basically for claims to be paid with the utmost least underwriting. And I think the most automated type of underwriting, where the same way you'd be able to cash in a voucher or generate a voucher to cash out a mobile money withdrawal from your mobile, it should be the same way you should be able to cash in on an insurance policy, basically by way of our collective software and experiences across the industry coming together, and obviously be able to be a bit more predictive in terms of what customer behavior warrants certain claims, et cetera, et cetera. So I think for me, those are the key issues. And I think a lot of companies have already implemented them. But of course, in certain markets where technology is just now being applied, I see that to be something that will be of particular use in the next 4 to 5 years, if not more.
Okay. And inclusivity solutions, since we were concerned about the inclusivity issues, you've got the solutions. Jeremy, what's the answer? How do we keep low-income people getting product for the next 5 years and beyond?
Well, fair enough. Playing off the MTN focus, in a previous hat when I was at Finmark Trust, one of the first of the FSDs in these markets, we actually worked with MTN around what should their plans be around what became the mobile money space. And the initial internal business case was saying, let's focus on payments around the top end of the market. They're higher value customers. And yet in that work, we realized that if they only focus on that, it may be marginal, but it wouldn't drive value. But actually, if you had that broader proposition where you covered multi-segment models, that's essentially where value would be created for MTN in the kind of the payment space. And you've seen that paid out also of M-Pesa and Kenya and other markets. So again, if you focus just on that segment of the, I'll say top end of the segment, you may make a return, but you probably won't really make a kind of a decent return. So again, you need to actually look at that whole kind of pyramid. We covered the low mass market, as well as basically have segmented offerings for the upper end. And I think we've seen that play out, whether it's around mobile money with MTN, and certainly with kind of these M-Pesa, kind of the famous M-Pesa story, and those other markets. It is mass market offerings, but allowing differentiated offerings from that low mass, basic, simple cover, and then segmented offerings for the upper end. And I think that'll continue. And I think for all companies to make that return, you'll need to be able to have a kind of a broad, democratized access to insurance. And I think certainly intelligent technology is going to be a key enabler of that. I think that trend around embedded finance or embedded insurance will also continue, where you're seeing insurance linked into particular use cases. We're actually working with another market with insurance linked into remittances as well in Rwanda. And again, excited to see how those linkages come through and how they can be so powerful kind of in those markets. So again, I think those offerings are going to be mass market almost by definition to get to scale, like mobile money, leveraging technology to link that to other products and services. Would you like insurance? Like with that, being the old kind of joke, as well as basically seeing new technologies coming to bear to expand access. I'm still got an open question around fully digital sales. I think it's obviously a huge enabler, but we just still need to think around the more differentiated engagements from those low touch to the higher touch models and how those work. In 5 years, the question around conversational models will start coming to bear around how far are those chatbots, which we're already playing with in Kenya and a couple other markets, are how that can basically compensate for a kind of a hybrid of the pure digital compared with the higher touch models. So those are one of the open questions we'll need to play with going forward.
Yeah, I think that's one of the key questions that we have, is this the balance between high touch, low touch. What can we do with technology? What do we need to do face to face, especially as we get to the lower markets? So I agree. Richard, you said mobile networks weren't the be all and end all. What are we going to see in terms of massive distribution going forward? And as the insurer yourself, you cover that problem that you had for so long with insurers who didn't have the same approach that you did, let's say, to be nice.
Yeah, so I genuinely, it's kind of interesting. I got the team to print off a chart that showed revenue from, say, microfinance organizations and revenue from telcos, and we tracked it all the way back to the beginning of time for us. And at no point, at no point, even at the top of when we were serving, 60 odd million customers through the telcos, did revenue from telcos exceed that we made from MFIs. Right. So it's kind of interesting how, a lot of publicity, a lot of interest, a lot of excitement around telcos. And yet, if you're running a business and you're interested in running a business, sometimes I think of our relationships with the telcos as being like the kind of crowning piece. It's what gives you this kind of excitement and what have you. And, it's good. And definitely work with telcos. They're great partners, but don't build your model entirely around it. And so I think, I've got a number of points about where I think it's going. I think we'll continue to see the industry being predominantly a B2B business. So I think clearly, working with organizations that have a great brand and a clear payments gateway. But I think it's exciting to see new channels coming on stream that are much broader than just the telcos or the MFIs. So a lot going on in the e-commerce space. Finally, I think remittances is the big kind of Wild West, which all of us have talked about and thought about for many, many years. But it's really, really hard to make a breakthrough there. But I think there are some coming. So I'm just ticking these off as I go on my little list, right? I think that we're going to see, kind of to counter that, I think that there are a number of models that are starting to emerge around B2C. So there are a number of people that are trying to make B2C work. It's super, super hard because you have to invest so much in a brand. And also in owning the payments piece, which is just so expensive. And so, I think it's going to be really, really hard. But it is an area that if anyone can make it work, I think it will be very transformative for the industry. Jeremy alluded to this. We're in an interesting time at the moment where actually both Jeremy and Andrew alluded to it. So telcos are seeing a reduction in ARPU. So they're seeing a reduction in the amount of airtime that people are topping up on their phone. And at the same time, an increase in the amount that people are buying data. So people are switching away from buying airtime minutes to buying data. A lot of the billing is against airtime minutes. So people have a lot less airtime minutes. It's very hard to then bill against it. At the same time, mobile money is taking off, and if you read all the GSMA stuff, it is taking off. And Jeremy alluded to this, in many countries, people still use the wallets for kind of cash in, cash out transactions. I put some money on, I make a payment, I don't leave any money on my wallet. So that doesn't actually help us in the insurance industry, because when you go to the person's wallet, there's no money there. It doesn't matter, right? Unless you get very lucky and you just manage to get the money just before they manage to make the payment they intended to. But then you've got a very annoyed customer because he loaded his wallet for a specific purpose and you just stole his money. But we are starting to see in some countries that we work in that people are starting gradually to move towards actually using their mobile wallet more like a wallet and actually leaving money in it overnight. And then that then opens up. That means that it can then kind of transpose the reduction in airtime. But it's happening slowly. But I think we will see that as being a major trend over the next kind of few years, and I think that will help us. I think we're going to see things like parametric, machine learning, AI. Instead of it just being a conference topic that people talk about, actually being used in anger and in danger of actually helping speed up claims quite dramatically. That's starting to happen, and we're starting to use that on certain products, and I think that will accelerate. And then the final one is finally, I think we're going to see kind of product differentiation. So a lot of micro has been about, personal accident, funeral, or hospi cash. And I remember when hospi cash came on stream and we were all excited about that. But that was a good 10 years ago. I think we're starting to see an increased demand for kind of non-life products. So instead of just things that happen to the person, things that happen to their belongings. So we're starting to see that shift. People starting to ask for insurance for their phones and for other kind of assets that they have. I think there's also going to be some innovation around new models. So we're starting to see usage-based insurance taking off, especially for gig workers. So people that are, using motorcycle taxis, maybe they own the motorbike and they want usage-based insurance instead of buying insurance for the whole year. They want, insurance for only when they're working on their bike. And then Jeremy alluded to this, use of robocalls. I agree with him. We're seeing the need to use kind of chatbots and robocalls, but then, if the person's interested, so it's a good way of kind of like of identifying warm leads. But it's not, you can't rely upon it as a, you still have to get a person involved in selling the insurance. It reduces the amount of kind of like missed calls or calls that don't go through, or the person's not interested. So, if you use robocalls and chatbots, you can basically get a higher conversion rate. So we're seeing like 25 sales per agent per day in some countries where we're using this technology. And I think that will continue.
Well, thank you, Richard. There it is, the whole next 5 years outlined from
I don't know about that. I don't know about that.
And Richard. Maybe there'll be a few surprises in the middle there.
Yeah.
Let me say, it's about time to start wrapping up. So a couple things. I'd like each of you to provide 30 seconds, no more, of your greatest piece of wisdom. What should everybody do tomorrow to help move us in the right direction, whether it's to the 5 years or whether it's to better insurance through technology? Some piece of wisdom, 30 seconds maximum. After that, we're going to have a couple words from Lemmy. And then what we're going to do is we will have another 30 minutes that will be off the recording, off the clock, off the session, just as something that's an open discussion. And Asiye will, once we get past, once Lemmy speaks, then people who want to stay on can raise their hands. There's a raise your hand thing on the Zoom, and you can raise your hands, and Asiye will open you up. And so for now, 30 seconds. What should people take away? What can they do tomorrow to make things better, to improve their programs? Let's start with Andrew.
Okay, thanks, Michael. Okay, two things come to mind. So I think amongst some of the key challenges, obviously, around inclusive insurance, and obviously people that are experiencing insurance for pretty much the first time, is obviously persistency, retention, whether loyalty or paid for. Getting people to actually continuously value the insurance in the absence, especially of a claims experience. So there's the traditional things of testimonials from people who have claimed, et cetera, et cetera. But I think what has worked for us this far is obviously, and very key to note, is a level of being able to tangibilize the insurance cover. So we always talk about peace of mind, peace of mind, peace of mind. When you get insurance, you're buying the peace of mind, but it's very, very difficult for most people to tangibilize that. And that's why they end up foregoing the insurance to focus on a utility or rent or whatever other expense they can actually tangibilize more easier. So it's very important. And I think the digital space offers that opportunity. So a simple real-time notification that shows the customer the value of the cover that they have attained at a particular point in time helps to keep that peace of mind in a more tangible form, for lack of a better phrase. So I think that's very, very key for everybody or anybody that is looking to get into that space. It's very important that, yeah, yep. Tangibilizing, yeah.
That's a new word for me. I'm sorry, yes. I have to move on, Andrew.
Yeah, not a problem. The last one, obviously, is just a quote. Low income doesn't mean low intelligence. Please, let's not patronize the customer. Let's learn from them. And you'll be surprised at how intelligible they are with regards how they're taking care of risk and how you can contribute to that as an insurer. digitally.
Yeah, I hope everybody tweets that or does whatever they do in social media, because that's a critical point. Thank you for that, Andrew. Jeremy, 30 seconds.
From our side, critical aspect is finding the right distribution partner that has the payment hygiene factors, the ability to support frictionless payments. If that's in place, not in place, and you're stuck with push payments, it's a dog, and you need to move on from that. So really think through your frictionless payments and how that's going to work, whether it's embedded, bundled, or voluntary paid. One aspect. Two, you've got to delight the customer by a smooth and easy customer experience. Make sure it's easy to sign up, to claim, process. Third one, I'd highly recommend that everybody drives kind of rapid experiments to get the right product market fit. So really try and experiment from registration, sales, financial education, product features, and design to make sure you've got a model that really makes sense, and use the data to be able to inform those decisions. So again, applying behavioral economics and other to really help drive those experiments strongly.
Excellent. Okay. And Richard, last word. Well, before
just be honest with yourself. I think I think quite often when I look back, my biggest regret is that I wanted to fail fast, but all too often we failed slowly. And I think if there are things that you're doing and they're not working out, kind of getting up and just doing the same thing and hoping that it will change is probably a good definition of insanity as opposed to a route to success. So be honest with yourself and be honest with your colleagues about what is working, and if it isn't working, then make the change that's necessary.
Learn from what's not working, change, move on. Yep. Okay. And I thank you all very much in the audience, those of you who are with us still. And I certainly thank you, Andrew, Jeremy, Richard. I think this was a great discussion. And I think there actually was a great deal of wisdom that came out of this, and a lot of information that people actually can use. So I thank you for all that. And yeah, so I thank you. And now, Lemi Manji from Finprobity Solutions.
Thank you, Michael. This has been great. And thank you for giving us a BBC version of Hard Talk for inclusive insurance. This was excellent. Yeah, thanks, Richard. Thanks, Andrew. Thanks, Jeremy. This was very, very useful. And I just wanted to take the opportunity to deeply thank you for the great insights. And I think you've really built on the opening session we had in terms of now diving deeper into some of the great insights on this topic. And I would like to remind all the participants that this afternoon we have one more session, another great session, transitioning from models to strategies and products. So I think don't miss out that. We dive into learning from Bima, learning from Movicare, and just giving some more specific details. So 2 p.m. You can have your lunch, and then at 2 p.m. we have the last session. And then tomorrow, of course, we have 2 more sessions to close this exciting seminar. Once again, thanks, panelists. This was an excellent discussion. We enjoyed it, and of course, learned a lot from it. Thank you.
Thank you, Lemi. Thank you very much.
Thanks.
And so, I'm sorry. And so now we close the formal session. So the recording will go off, and those of you who want to stay on